The market is very dynamic, and market forces know what is the real true and real worth of this sector for this company and for this management. So I think they will find a true value and it will settle around that. The company has been on a growth trajectory for the last 20 years, and the kind of opportunity this sector provides, and especially within India, and for the group like ours, which has a passion and an attitude to grow from here on, we have created a balance sheet which will sustain this kind of Capexes going forward, and would like to harness every opportunity what is available within India, and would like to maintain a growth momentum in a robust manner. Well, the target what we kept ourselves is definitely better, but then the performance is going on as of now. The Q1 results you have already seen of June 23, which has shown a decent growth over previous year, and we would expect and we would like to maintain all our efforts to ensure that the growth momentum continues. So, if you see, a couple of our terminals are very new, which are big ticket investment, especially if I have to talk about Paradip Coal Terminal and Paradip Arun Terminal, which has started operating in the last 3-4 years only. Rather, the coal terminal started, this is the second full year of operation of the terminal. And we expect good volume growth from there on, and the revenue growth as well. So similarly, the container terminal in Mangalore, which is just about the second year of operation, full year of operation, this is also is doing extremely well, and we expect that to also to be doing very good going forward. And that's the precise reason why we have preponed our Capex plans for the terminal, and which is also mentioned in the RHP, that we are doing a phase 2 development now itself. So if I have to look at the container terminal spend on the Capex side, that will take about 15 to 18 months time from today, or 15 months time more or less from today. It should start generating revenue from that Capex, and the LPG terminal will take about 30 months from today. That will start generating revenue. Our expectation is that it's a 2 million ton terminal, so it will take time to ramp up the terminal, but it start generating revenue. Already we are running a small LPG terminal in Jaigarh, so that would be an additional revenue which we expect from that terminal as well. I think it's difficult to put a number today, but in our calculations, we generally keep, the entire investment should be fully utilized within 3 years time frame. That's where the timeline what we keep for any investment what we do, especially on the brownfield or the bidding terminal side. Greenfield is a different subject altogether, but then all these terminals, we keep a 3 years time to fulfill the entire investment model. Like what we see, this is the third year of operation of our iron ore terminal in Paradip. It is running at 100%. This is the second full year of operations of our coal terminal in Paradip. This is running at 60%. So we expect, in 3 years time, all our investment in the PPP model or the brownfield expansions should get fully utilized. So this is what the target we have kept for ourselves. I think 30 months is good enough time period to develop a model much more robust and much more closer to the reality. Well, the overall opportunity within India is immense. As I have been telling to several of my colleagues and the associates that, this is a sunrise sector in India, port industry, and it started just about 30 years back, and no major pan-India players are available today. Couple of handful players are there, and good coastline, good opportunity, the way economy is growing, the way government of India is framing the policy around it, whether it's Sagarmala, Gati Shakti, Bharatmala, all those facilities or whatever the policies the government is framing, is very clear visibility that government really wants to grow this sector in a big manner. The kind of 13-14% is the cost of logistics today on the GDP side, which is making us less competitive on the world stage. We should be ideally 8 to 9%. And the kind of effort government is putting through the policy, the kind of private investments are flowing in, the way the economy is growing. See, no economy can grow without touching the shores. It is very clear. So India is at the cusp wherein, big investment flow is likely to happen. The big opportunities are coming, already knocking at the door today. And I think we are in the right geography, in the right economy, the right sector, and the right balance sheet.